real wages have not gone up versus prices.
Okay. Meaning
So prices rose more than wages. So if you look at peak, I don't know what peak wages were, but let's say they were 6% last year, year-on-year wage growth, but peak prices were 9%. So people actually got poorer, which is why we've got a recession going on, because everybody lost purchasing power versus just basic goods.
So would you say we are in a recession already?
Yes. Yeah, by every indicator I've got, we're in a recession already. And it will become more abundantly clear. But look, I went down this journey that you're going down now in 2012. And that journey led me to crypto. I saw it and I knew that this was the answer. And that's why I first bought Bitcoin in 2013, was exactly this, is once you see what has happened, we know the system now, regardless of how it ends, whether it ends in slow, ongoing death of economic vibrancy or a spectacular blow up, the answer is you need to transition to what I call the Bitcoin life raft or the parallel financial system. It's there, and you can participate with $1 or $1 billion.
Hello and welcome to Money Talks. In today's video, Raoul talks about America's collapse and the potential financial crisis that's going to make the next 20 years intense. Also the benefits of Bitcoin and crypto adoption and how it will affect the financial system in the future. So without wasting any time, let's get into the video.
You get caught in this trap. If you own crypto or technology, you will outperform this entire thing. Now, if you're not wealthy enough to buy, set up a brokerage account doing that because it's complicated for you, you can do it with crypto for no money, and you'll participate not only in the trend of debasement, so you're not getting left behind, because if you're just getting an income and you're not buying any assets, you're truly getting behind. So your 401k may look like the S&P 500. That's not making you any richer. Just buy technology or buy crypto, and those are the only two assets that outperform the central bank balance sheet. So there's your solve at a personal level. With Bitcoin, I treat it as an asset that is going to protect my long-term wealth. And that sounds crazy when it goes up and down like it does, right? And you've just gone through that full first cycle and you're like, oh. But what you'll find is the low is higher than the last time it hit the bottom. And then the next low will be higher and each high is higher. Oh, it's in an uptrend. So I just don't need to sweat about the ups and downs. What I should do is just accumulate every time it's in a down cycle. Why? Well, because the down cycle is signifying that economic contraction is happening and that the world is slowing down and money's being taken out of the system, quantitative tightening, which is the opposite process, and assets fall. And interest rates are going up, so your disposable income's going down because your wages aren't going up enough and the interest rates have gone up more. So it's at that point, the outcome is if economic activity is going to slow down, the next year, in a year's time, they're going to be printing money or cutting rates because it's very cyclical for the phenomena of this rolling of this debt. So therefore, you should be buying more at these points because then you've got the next upside cycle to come, which is what I've always said is it's the cyclical trend within a secular trend.
Okay, this guaranteed people do not know the difference.
So secular trend is something long-term trend driven by a large explainable factor. Bitcoin is an answer to the financial system, and over time, the number of users and people who become aware of its superpower, the more people move across. That is a secular trend of adoption. That's really important. The cyclical trend, the cyclicality, is the ebb and flow within it. So that's the boom bust of the economy. Not at a gigantic bust level, it's just a boom bust. Now, Bitcoin halving cycles correspond with all of this. Why? Is there some magic in that reduction of supply? Maybe. But Bitcoin came out exactly at the same time that all interest rates went to zero. They're all part of the same cycle. So every time we get into this economic cycle, it affects Bitcoin in the same way. But over the long run, the adoption, the secular cycle, means it outperforms everything. Because there's no secular adoption of the S&P 500. There's no secular adoption of General Electric, or that stuff's not really happening. Yes, there's an ongoing purchasing by 401ks, but that's really it. So that big mega trend is the observable trend that people can participate in, and it is going to more than offset what is going on with the debasement of currency. And that's to do with Metcalfe's law and the exponential trend of the adoption of a technological network or a technology itself. Great. So that's why Bitcoin charts over time just keep doing this. It's because it's exponential. The S&P 500 doesn't do that because it's not exponential.
Bitcoin and Ether are due volatility, but not thanks to toothless United States regulators, a new analysis says. In its latest market update on June 9, trading firm QCP Capital told market participants to gear up for macro-fueled price action for BTC and ETH. The dust is continuing to settle on this week's main macro stories: lawsuits against exchanges Binance and Coinbase from the U.S. Securities and Exchange Commission. More upheaval will come in the future. QCP believes as the macro environment from next week onward becomes much more unpredictable. The SEC and Chair Gary Gensler, however, even if they continue to go after crypto, will not spark the mass price depreciation that some fear. Once again, trigger-happy Gensler and his SEC cronies wielded their securities threat on their favorite whipping industry. However, as we have maintained before, BTC/ETH will continue to treat the SEC as a toothless adversary, especially as it becomes crystal clear that the term security will not apply to either. As more and more such far-fetched SEC complaints are filed, it becomes increasingly clear all they are seeking are sensational headlines leading to a final fat settlement. After all, Gensler has proven the most capitalist of all previous regulators.
What we are doing since 2008 is mutualizing the bankruptcy of the system via the debasement of currency, which is the...
When you say mutualizing, you mean making it everybody's problem?
Yes. You can either raise taxes, which they're trying to do too, but they're also printing currency via the mechanism called quantitative easing, which is actually debasing the currency, which means that every time they do it, asset prices optically rise. They don't actually rise. Because if you look at the central bank balance sheet and divide all assets by it, so you're changing the denominator, it's normally US dollars, but when you use the balance sheet, you say, okay, this is the purchasing power of dollars. Now, how many dollars are in the economy or excess printed? And what you find is something like the S&P 500 has gone nowhere. Real estate, gold, gone nowhere. And there's only two assets that have actually outperformed, which were crypto and technology. Okay, which is why we all feel like even though stocks are going up and our 401k is going up, nobody's getting any richer. Okay? We all know this intuitively, that we're not actually getting richer because the stocks I sell doesn't buy me more of a house. So what the fuck? What was the point of buying the stocks? The value of my assets aren't going up. But that is a mutualization, which is bad because it mutualizes it amongst people who don't have assets. So you'll never be able to buy an asset, which is why when you speak to a millennial now, they're like, we can't afford a house. Why? Because they came in to the labor force after the Fed started monetizing or lowering the value of the denominator. So property's got more and more expensive for them. It's impossible for them to buy property really, unless they're really lucky in the workforce or in entrepreneurship or whatever it is. But generally speaking, it's become impossible. And everything has got more and more expensive, assets have, because of this optical illusion. But wages haven't gone up, remember, right? That's the key thing. Assets are going like this. We were doing this before because of demographics, and it was making people pissed. And now we're doing it from debasement, and there's no way around it. So what debasement does, on the other hand, remember, it makes the price of assets look like it's going up. This is why you can't have a banking crisis of the order of magnitude that existed before 2008. The reason being is you just print money the moment you see it, and voila, everything goes up. So the value of your collateral, so if you think about a debt, it's collateral plus the debt, and the collateral is what guarantees the debt. If you've got a banking crisis, your collateral is often falling so fast that, like commercial real estate, right? We're going to have a problem with that. So there's a bunch of debt, and the banks have got this commercial real estate as collateral, and it's all bloody empty, and everybody's going to try and get out of it. So the answer to that is print money and essentially magic that collateral higher, or put it on the central bank balance sheet. Europe has already done this. So I don't think you can have a systemic collapse because the value of the assets can never go down enough. This is what most people can't get their heads around.
The days following the exchange lawsuits have so far seen crypto market sentiment withstand the pressure, with the crypto fear and greed index staying rooted at 5100s, neutral territory. Beyond the SDC itself, meanwhile, next week's macro data reports could provide a trigger of their own. The Consumer Price Index CPI, print for May, is due June 13, along with the Federal Reserve policy update, which will decide the next step for benchmark interest rates. Going into next week, we have an action-packed macro week as well, with US CPI, the June FOMC, including quarterly Fed rate projections, and other huge central bank meetings all taking place, HUCP noted. The analysis also flagged changes to the Treasury General Account act to suck liquidity out of the monetary system, and in doing so present a potential headwind for risk assets across the board.
Let's just get out of the NFT noise and everything else. I'm having dinner with a friend of mine. He used to run the trading operations of one of the largest banks in Australia. And it's a big bank, the equivalent of Bank of America. And he's like, yeah, he's just retired. And he's like, yeah, I've been heavily involved in crypto at the bank, doing stuff. I'm like, what are you guys doing? He goes, we've issued 5 stablecoins. I'm like, why? Why do you need the stablecoins? Why not use Tether or USDC or whatever? He's like, okay, so this is what people don't understand, why crypto is so important for the financial system. He said, we're in Australia. We have a gigantic pension system. Our pension system buys a gigantic amount of US equities. The US is about to go to settlement. So when you buy a share and you have to pay for it from T+2 or T+3, so that's trade date plus 3 days to pay for the bill, to T+1. Okay, that seems fine. Foreign exchange transactions are T+2. They can't settle the US stocks that they buy. So they either have to leave massive amounts of money with a broker that they dealt with who could go bust or uses the money ineffectively, or they create a stable coin for instant settlement. So and they've built that. This one is on top of Ethereum. Okay, fine. But that is a multi-$100 billion use case for why crypto is very powerful for increasing productivity within the financial system alone. And there's many of these all over the place. So why is Tether such a big, useful stablecoin? You've basically fractionalized the US dollar and allowed a person in the Philippines who works in a rice field to receive a payment from his cousin who's living in New York City instantaneously without any cost in dollars, which is the currency that they all want. That's mind-blowing. That's why the stablecoin system alone is so gigantic. So I don't agree with there is no productivity or killer app. The killer app of crypto so far has actually been stablecoins.
So is it a good time to invest in Bitcoin, and what's your prediction for Bitcoin in 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.